From the last 3 months, I have been stuck in a brutal losing streak. Most people quit here. On YouTube, most people only show you the wins, but I am gonna show you the truth. Everything you will see after this intro will be 100% unedited and unfiltered. No flashy cuts, no hype, just the raw reality of the losses. I am keeping it because that's where the actual growth and value is. If you want to see the real downswings and how to handle it, stay tuned and let's get into it. So now we are on trading view. In this I have marked my all losses which I have incurred in this losing streak. So we will go one by one deep into each loss. So first on 9 February 7:30 Monday, we incurred a loss in GBPJPY, in which our mistake was that when see on higher time frame 4 hour, price was making higher highs, higher lows, higher lows, higher highs, and then made a fractal market shift, making a lower high, and then came here to sweep the liquidity and then gone down. But here was a twist. I didn't understand that this was a market shift, and I took this as a bullish break of structure, which was a liquidity sweep. And then I marked a point of interest here, and then price mitigated this point of interest, gave us a market shift, and came here. And now we will shift to lower time frame 15 minute February 9. So we will shift to February 9 and see the time when price came here and gave us the mitigation to 15-minute flip zone. The time I entered here after a big gigantic candle, the internal structure was bearish, means I was trading against the internal structure. So in this trade, the main mistake was that I was trading against the internal structure, and I entered on this big gigantic candle, which was just to make liquidity. Let me explain. In this big gigantic candle, all retailers were thinking that price is gonna go up, and they all are buying here, 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 and their stop loss is where? Here. So what's the best point to sell? The smart money will sell after a liquidity sweep. So price made a cheeky little liquidity sweep here, and smart money sold here, and see how beautiful the trade goes of smart money. And here I became the exit liquidity. So the lesson one from this loss is that always trade with the internal structure and never enter on the big candles. Wait for a pullback and internal structure shift. So what will be the best entry I could have made in this trade? So the best entry would be that I have waited for price to break past this high, then come to this point of interest and then enter. If I have made my entry here, the entry would be much better, but in impatience and FOMO I entered here. Instead of seeing the internal structure, I saw that the candle is big, means the momentum is strong. But every time the big candle doesn't represent that the momentum is strong. It can also be a smart money tricks to make you liquidity. So the first lesson is always trade with the internal structure and never enter on these big huge candles. Now let's get to our trade 2. So our second trade is here. it's on 27 February 7:30 in GBPJPY. See, the internal structure of higher time frame was bullish, making higher highs, higher lows, higher highs, higher lows. But the time price mitigated this point of interest. This point of interest wasn't a good point of interest. Let me show you. See, at this time, February 27. At this time, when the point of interest was made, price haven't swept a good on liquidity. Price came here, made a low, again came up, made a low. And see deeply what it's making. It's making a double bottom, means it's a inducement. Price will go below it to sweep the inducement, but because I was in FOMO, I made it as a point of interest, but still it was not in premium and discount. See, the last low which made the market shift to this point of interest was this. So see, is this point of interest in premium discount? No. So this is a low probability point of interest, and after it I saw that price on 15-minute gave us a fractal market shift and then came to this point of interest, but I was in emotions and therefore I doesn't saw that what's going bad, and therefore I entered at low quality point of interest. And see, what's the lesson from this trade? The main lessons from this trade is that never ever enter on a low probability point of interest. Number 2, always trade in premium and discount. And number 3, always follow internal structure. See, in this time frame, in this trade, the internal structure on 1 hour time frame was bearish. Price came here and made a fractal market shift. So if I have to take a best entry, I would have taken that entry after the market shift of this. But this was a liquidity shift and I entered in here. So this was a bad trade. So what's the key lessons you can take from this trade? The key lesson from this trade is: number 1, always trade on high probability point of interest. The point of interest which swept lot of liquidity, push pull inducement, and it's on premium and discount. Number 2, always trade in premium and discount. And number 3, never ever trade against the internal structure. And then the second trade I have took here, this also have the same logic. This was the best trade. This was not a trade I have taken emotions or any mistake. This trade was good. Price came here, the internal structure was bullish. Price came here, gave us a fractal market shift on 15-minute, again mitigated 15-minute point of interest. But the main mistake I have incurred in this trade which made it a loss is that in a fear of losing, because my past trades were losses, I lost too much money on my past trades, and therefore I become emotional. I was thinking that if this trade lose, my account will be blown up, and therefore I exited here in break even. Just after the move happened, if I haven't exited here, I have easily made about 5.4 hour. I have made 5.4 hour in this trade, but in fear of losing, I exited here. So the key lesson from this trade is never ever hesitate from a trade, because if you lose, you lose. If you win, you win. See, if you hesitate from the trade and exit in break even, you are losing trades. Not losing trades, you are putting money on the table. Means the money you can take, you are not taking it. You are telling the money that don't come to me. And
If you are an idiot, you can say that. But if you wanted to become a professional trader, I am giving you a rule. Follow it. Set and forget. Once you take a trade, set your TP, set your target, and then forget. Don't ever look to the trade. Just close the laptop, set the alert to TP or SL, and then once the alert hit, open the charts and journal the trade. That's the main point. No break evens, just TP or SLs, no in between. Okay, so the main lesson from this trade is never ever let your emotions take over you, and never ever break even. Just TP or SL, set and forget. And then our next trade is here. This is the intraday trade I have took on my 15-minute intraday strategy. See where the trade gone. Yes, it's here. No. Yes, it's here. See, here was that 15-minute. My plan was to sell at this area. My plan was to sell at this area because it was with the swing trend, but because the internal structure was bullish, see, making higher highs, higher lows, higher highs, higher lows, I think that the trade eventually want to go up, and in order to go up, price have to make higher highs, higher lows, and if I capitalize on this move, it will be much better. Yes, the thinking was good, but the timing was bad. The timing was that if I have entered after the mitigation of these point of interest, I would have taken best entry, much more best entry. See, my entries are on 5-minute time frame, so it's 31 March. See, if after the point of interest mitigation I would have entered just after the mitigation here and set my TP to this high, it's a 4-hour trade, and I have easily hit the, see, it's just little after the spreads it will automatically come. See, I have made 4-hour, but because of hesitation, and because at this time I was obsessed with extra confluencer, I was thinking that the more confluencers I have, the more better the trade is, but it's not the truth. The truth is, if you are following your trade plan, managing your risk, and you are don't taking trades on emotion, the trade is already better. You don't need extra confluencers. See, extra confluencers is a trend nowadays on YouTube. Everyone says that if you have extra confluencers, the trade is better, but it's not the fucking truth. It's the lie people say to you. If you are waiting for extra confluencers, you can take the trade late, very late. See, that's what happened in this trade. The best entry is that I would have entered here, but in extra confluence I see that breakout structure, again a break of structure. I think that price will mitigate these point of interest, then I enter, but still in hesitation I didn't enter here. Then again I saw that price made a breakout structure and here, and this time I was in FOMO, fear of missing out, that the price has already made these big move and I haven't capitalized on this move, and therefore I entered here. But I was a fucking idiot. I didn't saw that the move is already done. See, price have already moved this far. It's like how many pips? It's about 74 pip. Price have already moved 74 pip, mitigated the point of interest here, and I am entering here when the pullback is starting. It's a fucking bad trade. So the key lesson from this trade is never ever hesitate to enter a trade. If the trade is on your trade plan, enter it. no hesitation, reservation or fear. If you enter late, you are gonna lose, but if you enter early, it's have a chance of winning. So enter, just enter after the trade plan checks off. So the best trick from this is that at the side of your trading view, put your trade plan. See, Google have just made a feature called split view. If you made a trade plan here, at the end of video I will show you that. Okay, so let's get to the next point. So the main key lessons from this trade is that never ever hesitate to take a trade if it's follow in your trade plan. Number 2, never ever get obsessed with extra confluences. Just follow the confluences which are in your trade plan. And number 3, is that never ever emotions take over you. If you are too late to the trade, let it go. Losing money is always bad than not making money. Yes, if you don't make money, the money is in your account, but if you lose money, the money is gone. So if you don't get the trade, be happy that you didn't lose the trade. Don't be sad that you didn't make the money. There is always 50% chance that you win or lose. So always think and see, after taking a trade, say to yourself, this trade is already lost. I don't care about this trade. Lost. This psychology will take you that you don't care about the trade. If the trade is losing, you will not fear, because you have already told yourself that this trade is already lost. Now shift to the second trade. Here, this was a big mistake in this trade. See, here was a big mistake. In the swing trend, the price is bearish. Okay, but in the internal trend, price is bullish. And here was a big mistake, that after taking the lessons of always trade with the internal structure, I still didn't took the trade with the internal structure. Yes, I have planned that after the price break past these low, see, after the price break past this low, I will enter here. But in the greed, I was in greed that if I enter here, I will only get 2 hour, but if I enter here, I will get 3 to 4 hour. And in this greed, I entered after a fractal market shift on 5-minute time frame. Didn't wait for price to break past the 15-minute internal low, and therefore I got that shitty entry. Because if I have waited for price to break past these low, I would get a much better entry and a safer entry. So in this trade, I was in greed. And the key lesson from this trade is the same. Always trade with the internal structure, and number 2, the main. 2 hour is always better than -1 hour. Means never ever get so obsessed with the risk to reward ratio. If you are making 2 hour, it's better, because making 2 hour is always better than losing 1 hour. If you lose 1 hour, you are making nothing, even giving your hard-earned money. But if you are making 2 hour, it's better than -1 hour. Okay, so always make a psychology in your head that 2 hour is always better than 1 hour. Wait for the internal structure to align and then only enter. If the internal structure is not aligned, no trade. Make a rule, no internal structure aligned, no trade. And our last trade on GBPJPY is here. I think this trade is the worst trade I have took in my entire career. This is not this. After this trade, the trade is, see here, on the swing structure, price was bullish, making high rise, high lows. On internal structure, price recently gave us a bullish breakout structure plus a market shift. Then price came here to this point of interest on internal structure, and then here gave us a market shift, and then we for wait for a new higher high to be formed to get a little extra confluences. Now you all were thinking that what's the problem in this trade? What is the mistake? So the mistake in this trade is same. I didn't saw the trade is against the internal structure. And the key point in this trade is that price makes pattern before the move. If you identify the patterns, you will be safe. And I will teach you how to identify the patterns. See, at this time, I was thinking that price is bullish on internal structure, but the objective of price was to go down because here price was overly extended. See, if I go to 4-hour time frame, the price was so extended. See, price was at all time high. Price was here, and in order to make one more move to the upside, price have to come down, and therefore price have to pull back. But I didn't understand the objective of price, and I took buy position here. But every retailer, even a trader starting out, knows that if the price is overly extended, it has to pull back. And here was a twist. See, on internal structure, price made a pattern that price made a lower high. This was a pattern. After making a fractal market shift, price make a lower high, then come down. This was a lower high, lower lows formation, and this was not a market shift. This was a liquidity sweep, but I anticipated it as a market shift, and therefore I got trapped. Prices were making lower highs, lower lows, lower highs, lower lows, and in this, because I was so goddamn emotional and trading in emotion, not plan, and therefore I took this bad entry. So what is the key lesson from this trade? The key lessons you can take from this trade is never ever enter a trade if the price is overly extended. Wait for the pullback. And number 2, always see the objective reality of market. Shift to higher time frame. It can be 4-hour, daily, 1 hour, anything. Shift to the higher time frame and see what's the objective of price. Means what price have to do. Close your eyes and think what a billionaire hedge fund trader will do here. Will he buy or sell? Because a billionaire hedge fund trader can't buy or sell, right? Like buy, sell. He wants liquidity. And where is the liquidity? Ask yourself, and then you will get a much better entry. So key point from this trade is always trade with the internal structure. Number 2, always see the objective reality of price. And number 3, never ever enter a trade if the price is overly extended. Now our last and final, the worst trade I have took in my entire career is on gold. See, here what happened. Price was bullish. On swing trend, price was bullish. Okay, price came here to mitigate this point of interest, gave us market shift, and here price was making a lower, means higher low. But here I was so emotional. My mindset was completely burnt out because of past losses. My mind was completely destroyed. I was only thinking about how to recover the loss, I was not thinking about how to make this the best trade possible. I was thinking about how to recover the loss, and in that I entered without any market shift or any extra confluences. Let me show you. See, on 5-minute time frame, just after the price mitigated this point of interest, I entered and I took this fucking bad trade. So the main key lesson from this trade is never ever enter in emotions and never ever trade against the internal structure. See the objective reality of price. In this trade, the objective reality of price is to go up and mitigate the swing point of interest on 4-hour time frame. Let me show you. See, the swing point of interest is here and price wanted to go up, therefore price is making this higher high higher low formation. This is the objective reality of price. Even though I know that the objective reality of price is to go up, but still in emotions I took this bad trade. So this is the total summary of all my trades. Yes, this video make so long. It's been 25 minutes. We are yapping here, but it's the main lessons you can take this. So if you want a summary, I have made it in description. In description I have made a full summary of this all trade losses. And now you are thinking that how will you recover this loss? You are about 7 to 8% down. So I am making a 7 days retrade. In this 7 trade days I will not touch the charts. I am completely cut out from the chart and only journal these losses and review these losses and then come with a sharper mind. So and one pro tip from me is that after a big losing streak, when your mind is unable to trade, take a trading retreat, minimum 7 trades, minimum 7 days. Cut out from the charts, no charts, just you and your journal. Journal and review your all trades and see what's the mistakes you have incurred in this losing streak. And after that, after 7 days, you will be much better trader. And now I am in this huge losing streak. After the 7 days, let's see what happened. And if you want more content like this, subscribe to our YouTube channel and make sure you like this channel and comment down below what's the biggest lesson you have took this from this video. And if you want more videos like this, raw and unfiltered unedited video, comment down below. And as always, you are just one trade away, and trade your plan and plan your trade.